Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. Samsung Electronics has kicked off Korea's earnings season on a strong note, posting another record-breaking quarter and beating market expectations as AI-driven demand continues to reshape the semiconductor industry. At the same time, the Korean government has unveiled its ambitious mega projects focused on semiconductors, physical AI, and AI data centers, signaling a major push for future growth. So what do these developments mean for the Korean economy and the stock market? And with global uncertainties and foreign selling still in the picture, can this rally continue? To help us break it all down, we're joined in the studio by Professor Yang Jun-sok from the Catholic University of Korea. Big welcome.
Happy to be here.
And also joining us online is Hwa-Kyun Kim, Professor of Banking and Finance at Texas A&M University's Mays Business School. Good to see you again.
Always a pleasure.
So let's start right away with Professor Kim. So like I've said, Samsung has reported another record-breaking quarter, beating market expectations. What stood out for you the most about the results and the market reaction?
I mean, in terms of earning, very impressive again. I think over 89 trillion won in operating profits, which is obviously a big push from 57 trillion won in operating profit in the first quarter. And then compared to a year ago, I think it's about over like 16, 17 times. So it is beyond actually, being impressive. In terms of market reaction, I mean, we saw that the KOSPI fell down about 5%. Also, both Samsung and SK Hynix actually fell about 6 to 7%. So according to typical the studies, when there's the earnings surprise, then stock price goes up that day. But what we see actually is exactly the opposite to it. So that means either investors were not quite surprised, so they already kind of know. I mean, analysts actually just put a little lower number, but investors already gave really, really high expectations. Therefore, either it's fulfilled or it's slightly below the expectation, even in some sense, if we use the same analogy actually here. So I guess what stood out, I think, to me most is kind of this, how fast this expectation is built into the stock price nowadays in the Korean stock market. So I would say, I remember we had similar talk about a year ago in the same show here. And then at that time, the story was about, or debate was about whether Samsung deliver or recover compared to Hynix or from the past mistakes about the SSD. Now I think this is more about the story is how much of this super cycle that actually just arrived is going to be continuing or is priced in. And then the results are basically in terms of stock market saying price has been going up enough. And now I think the investors are worried about whether this can continue or whether there will be some additional regulation risk or government risk or political risk. So I think, kind of the convoluted sort of the market expectations changes seem to contribute to this big sort of disconnect between the earnings beating and all beaten and then also the stock price changes. So overall, I don't think, it's going to be a very important long-term fundamental changes, but there will be some sort of fluctuations given the events.
We're expecting fluctuations moving forward. But what about Professor Yang? Do you think these kinds of results suggest Korea's semiconductor supercycle still has some room to run?
Well, the majority point of view is that it'll last at least until next year. But there is a sizable minority that says that we have to watch out. It may stop before then. So let me try to give both arguments. The first argument that the super cycle will last at least until next year and perhaps even beyond. The idea behind that is that right now AI is just beginning to be adapted. And these proponents argue that you're beginning to see the increases in productivity. This is a bit controversial. The U.S. productivity figures are increasing, but there's no agreement on the reason why. A lot of people believe that this has nothing to do with AI, but things like working from home, But these AI proponents are saying that these results of the AI are beginning to show on the macroeconomic indicators already. And then the AI companies have not been making profits for the last few years, so they've raised prices in the last half year or so. People are looking forward to these AI companies finally making some profit after all this investment. On the other side, though, is that some people feel that AI industry, both stock prices and data centers, they may be caught in a bubble. If you look at the management statistics, then these statistics are historically high. So that these firms have to succeed not only well, but tremendously well to succeed. And there's some question on whether they'll be able to do that. And as I mentioned, these companies have raised prices. And some companies find that AI services, or at least right now, is too expensive. And then the stock prices have risen so quickly that there's some fear that perhaps there's at least some bubble component to these numbers. Also, these AI investing companies have started to borrow tremendous amount of money to invest in data centers, and they're worried about what would happen if the Fed decides to raise the rates sometime this year. So if you take the majority view, then this trend for semiconductor demand will last until at least the second half next year, but there is a somewhat credible argument that it may end before then.
Mm-hmm. Thank you for explaining the situation for us. So a lot of variables are definitely playing in. Now, if we look a little bit deeper into the situation, some analysts say operating profit would have topped 100 trillion won without one-off bonus provisions. Professor Kim, does that give you more confidence that this rally is backed by strong fundamentals?
I mean, to some extent, yes. I mean, it's a huge number. And even with the extra unexpected the disbursement of like these bonuses and compensations, still it is really high. So almost close to 90 trillion won. So yes, so this beating of this earning is not a low quality one, just basically like jazzed up by like accounting gains or cost cuts, but it's actually truly a big sales actually boost. So I think, you know, this is going to continue to kick in because they do actually have agreement with the labor union and others. So, I mean, some part of like these compensations will be factored in, but I think still at the end of the day, if these human capital in Samsung actually can deliver even better, actually more, I don't think this is going to be a bad investment. So the overall, the productivity increase definitely there. And I think what's important here is that this the huge sort of change. One of the reasons why this, you know, the big sales boost and also the AI demand actually increased a lot is because these things in its nature should buy memories basically, right? So if you remember, like, you know, about 10, 15 years ago, my smartphone has only about 1 gig's maximum memory. Now I think, you know, we have like 16 gigs or something. Something like this will happen for just not the consumer products, but all the basically production facilities. So I think in that sense, this is going to be somewhat more permanent increase. Whether this is going to be continue to deliver this massive, like, you know, increase in sales is going to be, again, it's going to depend on like how things will pan out, and then productivity increase actually is actually showing. But definitely it's going to change the regime from like, you know, we will upgrade our machines and the phones and the computers from like, say, 16 gigs to like 64 gigs or something. So it is going to be permanent increase, at least in terms of like, you know, this buying power and the productivity.
Mm-hmm. But even so, Professor Kim, foreign investors have remained as net sellers. Do you think today's earnings change that picture, or are bigger concerns still keeping overseas investors on the sidelines?
Well, I mean, the stock price always has some amount of the demand and supply component in addition to fundamental. At the end of the day, stock price goes up if we expect there are a lot of remaining pools actually who want to purchase, right? So that's actually one of the big push reasons for the stock price increase. the stock Samsung price actually, or the Hynix actually price have been increasing like crazy, in part because of the foreign investors also massively buying. Therefore, we expect that I think at some point they have to rebalance because many of these are institutional investors, so they have to rebalance. And especially if these funds are more like the index funds, then they actually have to adjust. If certain stocks actually price increase too much, then I think the index will actually be departing from what their actually values are, so net asset values, then they have to readjust. So for the time being, we will see, because of the huge increase in the short term, we will see some, the net outflow actually from the foreign investors. And also there are a lot of the derivative investors as well. So I think those kind of things can contribute to it. So I wouldn't worry too much about it, but clearly these kind of the demand and supply from the foreign investor side, whether this is technical or for more fundamental issues, will increase the volatility and uncertainty to the stock prices of Samsung and Hynix, and in general, I think Korean stock market.
So investor confidence remains a key piece of puzzle in that regard. Now, if we turn to the latest announcement by the government, Professor Yang, it unveiled this mega projects, of course. Do you think it is helpful in boosting Korea's long-term growth?
Okay, well, it'll be helpful, but problem is it's a long-term bet. And this is a case where semiconductors and AI right now are very, very hot. So I think the government's logic is let's strike the iron while it's still hot. Now, if this demand for semiconductors and the growth that we see, if that lasts for an extended period of time, remember, it'll take somewhere between 3 to 10 years to build these fabs, build these semiconductor and AI facilities. So if the semiconductor growth, maybe not at the current pace, but still grows fairly in a healthy manner, then this investment will pay off. It'll help Korea maintain its technological edge against competitors in China and elsewhere. And it'll definitely add to Korea's future growth. However, if the semiconductor demand falls and is less than expected, then in some sense we're putting a lot of eggs in the same basket. So it might not be very helpful. But right now, I think it's a fair bet to make.
So the direction of the demand on semiconductors will be very important moving forward. Now, then from an investor's perspective, Professor Kim, could those projects actually create opportunities just beyond giant companies like Samsung Electronics and SK Hynix?
Well, it depends, right? But to some extent, it should be. It should be. And the reason is typically if the capital expenditure, the capex increase, then that's going to have short-term negative impacts on stock price and also the firm's operating cash flows, but it has very positive effects if investment is successful. So clearly this one's going to be a major bet for Samsung and also Hynix as well, and in general, I think for Korea. And it was more like a highway in 1960s and the internet, I think, in 2000. So now it is the semiconductors together with the AI and robotics and physical AI. So I think this is a reasonable bet. We're going into the new era in some sense in the Korea tries to maintain its edge. So can they not do it? Then I think they should do it. But I think in terms of the kind of the striking balances, in terms of using the existing capacity, not over investing so that it becomes more like a surplus, I think it's going to be the key in that sense.
So as far as I understood, both of our professors have expressed that it's quite an unreasonable bet moving forward. Then what would it take for these kinds of projects to translate into actual stronger growth and more jobs, Professor Yang?
Okay, well, if you want to have a semiconductor production base or AI cluster, you need first electricity. Government has promised to supply a lot of cheap electricity. Water, again, government has promised that. Third, and perhaps in the long term, most important component is qualified people. And that means you need to attract a lot of qualified people into the Honam area. That may be difficult, because right now it's losing population. There's no base that's already established for having a lot of qualified people there. So you will need not only manufacturing physical infrastructure, but what I would say cultural and research infrastructure. You need to have a lot of investment there in the universities. You need to have a lot of investment there, not only in housing, but things that will make families happy. And it's not quite sure yet whether government will make those kind of investment. They promised highways, railways, even airports. I'm not sure they promised parks or better universities. Further, if you want the AI to succeed, then you need regulatory and legal reforms. You want to speed up construction. You want to bring in water and electricity. That all requires substantial changes in laws and regulations from where they are. Government has promised this. It hasn't completely gone through yet. That's why the Yoin cluster is taking so long. But also, you need regulations for software. So you need, if you want to have an AI data center, you need to teach these language models. You need to have them read data and so on. Korea has a very restrictive regulation and laws on data protection. So unless you loosen that up, we may have the hardware, we will not have the software. So we need a major change in that front. It's not clear whether that's coming yet.
So we would have to expect for more adjustments in various areas. But when you step back a little bit, Professor Yang, investors are also watching closely on the FOMC minutes and the key U.S. and Chinese economic data. What kind of risks could have the biggest impact on Korea's stock market?
Okay, in the short term, I think the Fed interest rate will have the most shock. Perhaps it will not have very much of an effect, but there is, because these companies are borrowing a lot of money currently to finance these AI data center investments, there's concern that if the interest rate goes up, then a lot of these projects will no longer be profitable, especially since AI firms are not making that much money. And then the next is whether, for Korea at least, the important thing is whether the data center construction will continue. We talked about the interest rate risks, but also there's a question on whether AI will be profitable in the long run. And then there's some question on U.S. Citizens are becoming somewhat suspicious of AI and AI data centers because of a possibility of environmental harm, possibility of jobs taken away by AI, as well as just plain old NIMBY, not in my backyard syndrome. So if the AI industry can overcome that and continue the investment, then we will probably see, maybe not in the extent that we've seen currently, but still healthy growth in AI industry, steady growth in memory chip demand. But if this collapses, then, well, basically semiconductor is the engine of Korea's growth. And if that's taken away, then Korea will have to readjust a lot of its future plans and future growth projections.
So we'll have to see how these developments could shape the future direction of Korea's market. So with all of these risks and opportunities in mind, Professor Kim, where do you see the biggest investment opportunities in the months ahead?
Well, the first one is definitely the core ones, so the AI memories and all this SSDs and things that more like now current cash cows. And I'm sure that competitors really try to catch up with the Korean companies. So I think the widening the difference, I think it's going to be the most important thing at the end of the day. Monopoly power, I think, is the source of the huge gains in this case, especially across countries, right? So that's going to be the number one. And the second, I think, is the supply chain. And it's inevitable that I think the Korean companies need to trade and cooperate with the foreign firms. But at the same time, some of these firms sometimes actually have huge political risks and uncertainties. So coping with them is going to be extremely important. So at least as a huge hedge, just having establishing the local, the infrastructure partners and supply chain is going to be extremely important. And also this one has very good opportunities for expanding or extending these the gains and profits into the overall country. So I think I would definitely focus on the materials and some other of the related the supply chain the industries, either from the government side or the private side. This is going to be important investment opportunities. And then the third is, of course, the applications. Given that AI is now, I think, much more usable, the kind of integrating this with the physical part and also some other industry, even like some seemingly unrelated industry, I think is going to be extremely powerful. And also like, software contents and all these kind of things will be extremely important. So I think those would be the potential jackpots actually for the next coming months and probably upcoming years.
Those will be certainly something investors will be watching closely on. But I'm afraid we'll have to leave our discussion here tonight. Thank you so much for your insights, Professor Kim.
Always a pleasure.
And of course, Professor Yang, we really appreciate it.
Thank you.
And that'll be all from us on Within the Frame tonight. Be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.